Yeah, good afternoon, ladies and gentlemen, and a very warm welcome also from my side. My name is Reihe, and I am a tax partner at Deloitte based in Munich in a service line called Tax Management Consulting. And I'm also leading the AMANA Alliance here in Germany. So I'm very grateful for the fact that I have my fellow colleagues with me from Deloitte, and also our cooperation partner AMANA is here with us. So we have Wojtek Michalak from Deloitte, Poland, and we have Jessica Fuchs and Tobias Dovidat from AMANA here. So also welcome to you. Today's webcast will actually be about the digitization of the tax departments and the tools that AMANA Consulting can basically provide and help you with for these topics. So let me dive right into the agenda to explain you what we are going to do with you today in the next 60 minutes. So basically, I will give you a short introduction into the topic about the digital tax workplace. Then we will have Wojtek Michalak from Deloitte Poland, who will give us a brief overview about the regulations in Poland and how they are basically driving the digitization of the tax function. And then we will have the AMANA tool presentation from our AMANA colleagues. And to manage the expectations of you, we will basically have a mix of 25 to 30 minutes of slides for the information that we're going to give you. And then we will have 25 to 30 minutes with really live demo where you can see the tools in actions, basically. And you can also ask questions about them. So that brings me to the Q&A point at the end. If you have anything, please, feel free to put it into the chat or put it into the Q&A function in the webcast. We will look at this constantly, and if it fits in, we'll answer it right away. Or you can wait until the end of the webcast, and then we will answer your questions at the end. So let's start actually with the digital tax workplace and a brief overview. What we basically came up with is a framework to see basically where the tax departments stand when it comes to the digitization and the maturity grade that they have. So you see on the top of the slide basically that we distinct between a traditional, a standardized, a technology-oriented, and a digital tax department. And on the left side of the slide, you basically see that there are different value drivers for these different maturity stages. There are certain design elements basically then which help the tax departments to get from one stage to the next. And then there are structural elements at the bottom. I will not read out each and any one of them, but we'll give you a brief overview of what this means. So the traditional tax departments that we see in practice are usually very, very people-focused. Their workforce is basically their greatest value and the experience of those people, which also mean that these tax departments are dependent on their work staff. So if you have, for example, somebody who is on vacation or somebody who is retiring, that means that a lot of experience is basically draining from that tax department. And also if roles are not covered by certain people, that means those tasks will probably not be performed. The design elements actually for those tax departments are they're getting better by trying to standardize their processes, so putting the knowledge, for example, into handbooks and checklists, introducing controls on the way to a standardized tax department. The standardized tax department is then usually also already process and technology driven. So that means that a part of their processes are already automated, which brings them basically away from this people focus. So they are not as dependent on their workforce anymore because this people focus is replaced by a process focus. And with this automation, basically they get to the next maturity phase, also with standard processes, of course. The technology-driven tax department, I think that's where the tax departments are thriving to get to. So that's the benchmark, basically. Those tax departments usually have full end-to-end automated processes, usually with tools they have. It's not one tool they have for everything, but usually it's a variety of tools for different purposes. Some of them are attached to the ERP system. Some of them are tax tools with specific tax functionality. And this is why they're able basically to be more efficient as a tax department. And then the digital tax department, I think that's a bit the future of where everybody's trying to get to. This is basically a tax department that has automated all the processes and is now on the way to really value add with prognostics based on the data that they can have insight into and they can analyze. And they are basically already in the position to think about future technologies like blockchain, like artificial intelligence, to solve, so to speak, the issues of the future of the tax departments. That's the highest maturity grade, and to be honest, we don't see a lot of that in the tax departments, but we already see certain elements that some of our clients have already introduced or are basically introducing. So why are the tax departments doing this? So the technology basically that's helping them with that is on the next slide. And technology is actually the driver for this maturity journey that I just showed you. Deloitte made a survey and asked the participants basically, what do you think is the technology that will impact the tax departments? And you see in this darker blue color, basically the percentage of people, I'll take the example of blockchain, who said 19% of the participants said blockchain will have an impact on tax. And then 8% said, yes, I have working knowledge of this technology. And you can also see from the numbers here that the better known a technology is, the more people say, well, this is important for tax. So if you look at big data, I think everybody read about big data in the last years. Even if you don't know what it is, you've heard about it. So many people say it is important. And 28% say, yes, I have working knowledge of that. It doesn't necessarily mean that this is really the major driver for the tax departments, because otherwise 70% of all technology projects would be big data projects, and that's not what we see in the market. But it gives you a bit of a glimpse of what people think is important. And chatbots, which are probably a bit more complex, only 13% said this will have an impact, and 8% say this I know about sufficiently. It's all about efficiency usually with the technology, and in the next slide you basically see why tax departments are going on the technology journey. So on the left side you see basically an as-is situation with the tax departments. So the outer blue cycle, which covers more than 75% actually, is a role that we call the operator. And the operator is usually the person or the persons who are responsible for the information gathering, the tax declaration, and the reworking if you have any errors in your data. And that takes up more than 3/4 of the time of the tax departments. Another 20% are then taken up by review and reporting, and only 2% is left then for planning, and 2% is left for analysis. So the value add topics or the value add services tax departments really would like to perform, there is actually no time really to do them because they're so caught up in daily work and the basic things that need to be done to be compliant. And on the right side, you see how basically an evenly distributed model would look like, where each role would get about 1/4 of the time to spend on. And that leaves then sufficient time also to do the planning and the analytics tasks, which are the value add tax departments would like to do. And technology is one of the ways to get there, surely amongst other things too. So you'll need to have the right talent basically then to get this transition towards technology. You need to have the right organizational structure and also the culture to be pro-technology. But the technology and the standardization of your tasks is really what is getting you to this right picture. And Having said that, I would like to end the intro here and now give over to Wojtek for a keynote basically on what the journey was in Poland and what is going on there. So Wojtek, handing over to you.
I'm sorry. Thank you. Hello. So as Rainer mentioned, my name is Wojtek. I'm from Deloitte Poland, from also tax management consulting team, team with which I've been for almost 8 years, and with whom I actually went through this digitalization journey with regards to the Polish tax regulations, and I would like to tell you a bit more about the background, the reasons, and the expectations of the Polish tax authorities, which are driving digitalization of both taxes but also tax functions in Poland. So when it comes to the maturity of digitalization of tax function in Poland, we can say that it all started in 2014 when the Ministry of Finance imposed an obligation on specific types of taxpayers to provide certain corporate income tax, VAT, as well as withholding tax declarations, which were since then to be sent in an electronic way. So that was like the first milestone when both the corporations but also tax functions needed to start understanding that the digitalization of taxation is a must, and that the companies need to focus on this topic a bit more. The next step was introduction of the SAFTI-like standard in Poland. It's called JPK in Poland, which obliged taxpayers, initially large taxpayers, but since 2018, all the taxpayers, to provide their VAT registers on a monthly basis in a structured electronic way to our Polish tax authorities. Also, since then, tax authorities can, and they do, ask for accounting documents and general ledgers in electronic way of also SAFTI-like structured files. So that was, I would say, the biggest milestone so far, which led our tax experts, tax managers in companies, not only to familiarize with the technology, but most important, to get a very well knowledge of the processes, of the ERP processes within their company when it comes to the tax procedures. The next steps was also digitalization of financial statements, which are to be also prepared in a SAFTI-like format, in a structured files. That's since October 2018. The next stage, next milestone, was introduction of the mandatory disclosure rules reporting. So this is the reporting which in Europe is known better as DAC 6 directive reporting. Why it's worth mentioning when it comes to Poland? So Poland was one of the first jurisdictions which decided to implement it, so the MDR reporting, and Poland has one of the most, I would say, strict or broad reporting when it comes to the MDR reporting rules. This also led to like another push onto digitalization of tax function. Because in order to be able to workflow the MDR reports quite a few people in the companies needs to be involved. So in this case, it's not only the tax people who are signing off the final tax return, but often those are quite often people who have, for example, contacts with clients in case of financial institutions. So that was also kind of a milestone when it comes to the needs on the client side. The next milestone, which also had quite a significant impact, happened in October last year. Back then, the regular monthly reporting of VAT tax returns was fully replaced by the safety schema reports for VAT, meaning that since for a period starting in October 2020, taxpayers no longer issue tax return, but they are filing safety files on a regular monthly basis, containing both tax declaration part as well as the full VAT registers. So that's quite significant change. That's also something that the taxpayers needed to adjust to, because the scope of the data being gathered and reported is much broader than it used to be. Some new regulations were introduced, and in fact, still those new regulations are being enforced. Regulations regarding this reporting are being changed. For example, last week there was another law published which also introduced some of the changes to this type of reporting, to the type and scope of data to be gathered and reported, as well as most likely new schema will be published by the end of the year. That presents that in fact taxpayers and tax functions in the companies, they do need to keep up the pace of the changes that are driven by the legislation. One last thing which is also worth mentioning when it comes to Poland, there are still plans of further and fuller digitalization of the VAT area, as this is the main area in which our Ministry of Finance fights with frauds. So it is planned for the second part of this year to launch a kind of invoice repository which would require sending invoices, all issued invoices, to this repository prior for a kind of prior acceptance before they are fully valid and shared with the counterpart. So that's something which is which we are also facing. So that would be it when it comes to the journey of the digitalization of tax and functions in Poland. In a moment, if we could skip to the next slide, you'll see that indeed those actions, they do have impact on the business, on the tax functions in the companies. Why so? Mainly because of the tax audits are right now conducted mostly in a digitalized way. So no longer you need to prepare documents in an analog way, but you are sending safety files. And in some, well, of course, it can be prolonged, but in some specific cases, taxpayer can have as little as 3 days, and those are days, not working days, to prepare and provide the documents or the accounting documents to the taxpayers. Also, it's worth mentioning that the development of the VAT e-reporting is still ongoing. So, as mentioned, it is something that the tax authorities are trying to gather more and more information from. It is the area that needs very specific consideration when it comes to the companies and the information they are sharing. As also with this digitalization, new fines are also being enforced and can be imposed on the taxpayers. And of course also mentioned this digitalization of the invoicing process. That's also something which triggers the need for tax experts not only to focus on the tax area, but also to align with the ERP specialists and the ERP systems in the company in order to fully and better understand the procedures, in order to align those procedures, the possibilities of the ERP systems with the regulatory needs of the Polish Ministry of Finance. So yeah, when it comes to the digitalization of tax function in Poland, that would be the brief overview of it.
Thank you very much, Wojtek.
Yeah.
Thanks for that insight. And with that, I would like to then give over to, I think Tobias, you're starting, right?
Yes.
Okay, so we will now see basically the AMANA tool presentation. Thanks.
Thanks, Rainer. Thanks, Wojtek. Yeah, just to introduce myself, my name is Tobias Dovedat, and I'm in charge of everything tax reporting at AMANA. That covers deferred taxes and also other reporting obligations, mainly BEPS, so the BAC 6 topic, or country-by-country reporting. It was also mentioned by Wojtek before. If we can go skip to the next slide to start, to just tell you sorry, to tell you a bit about AMANA and then jump to the tools. So AMANA is now 10 years old, and we started in 2011 with 16 employees, and now we're more than 150, focus on different areas. While tax being the core business and the longest running business, we also separated the tax into tax and VAT, so that's two different kinds. And then we have Smart Notes, a reporting tool for preparation of notes, leasing and XBRL on the side. Also, the number of clients over the 10 years has significantly increased, while reaching out from the Austria, Switzerland, Germany region into more of Europe. That's the further development over the last 2-3 years, where we actually see more growth in the areas outside Germany, Switzerland, and Austria. That's our business. We work with different implementation partners, and that's a cooperation that Rainer was mentioning before, and that's why we want to show you today some of the tools that that we have. So if we can just skip forward. We have our own, and there's just a little separation for us. We are sort of a mixed business. We have partners and we have tax knowledge in-house, but we also need our partners for the international support. So if there is an international business, and Deloitte has the capabilities of international support while implementing a tool on a global scale, that's where we can work hand in hand, while having tax knowledge at AMANA and IT knowledge, but that also that global experience, that reach, and the capacity that Deloitte has, for example. So that's a quick introduction into us. So let me just share my screen and show you what we have here today. This is our global tax center, a solution for tax reporting. Today I want to focus on the automation. So that's one pressure that tax departments face, how we can run more efficiently, produce the data, gather data in a faster way, maybe even with less staff available, cost pressure and so on, but also the aging throughout the generations at these times. So maybe the availability of people as well. That's just one push factor for digitalization. The others mentioned by Wojtek where the legislative pressures were. That's a big push to digitalization of tax departments, is that the authorities provide digital interfaces to provide data in big data. That's actually where that is used. There's a lot of data to be transferred more and more, and the user needs to be in charge of that data when sending. That is where tools can be used. That's the external pressure. But today we want to focus on the internal pressure, where the company has to automate and to automate certain different processes in the data gathering to just work more efficient and use technology as a benefit to free up time to analyze, to prepare, to forecast, rather than doing a reporting of a past data. So that is one point, but also then there's the external effect that Wojtek was mentioning with the legislators. And we see that clearly if you look at countries like Switzerland and compare them to others in Europe. There's a different speed in that process of digitalization. So let's go to the tool. This is the GlobalTaxCenter web-based application, so it's independent of any platform or installation. You can run that on a Mac, on a Windows, on an iPad, on an Android device, whatever you want to use. And you can go straight into the tool and use all the functionality that are linked to the other systems, because that GlobalTaxCenter is integrated into your existing environment via different interfaces in and out. Interfaces in, meaning the collection of data, normally from a consolidation or single ERP system, sometimes more depending on what your group structure is. So you can consolidate the data in the pre-tax data. You can automatically import here. And then there's the export into Power BI or other BI systems. There's the reporting functionality within the tool itself. If you need to book directly into the ERP, you can do all that. So GTC is fully open. There's no limit of getting data in and out. And with having more than 150 clients, we have connected many different systems on both ways, an import and export way, which helps handling the data in a more efficient way. And just to show you that, I want to pick one example. It's the determination of deferred taxes based on temporary differences. And for that, we have this dialog here on the left side of the navigation bar. If we go to the single entity section and the balance sheet comparison, this is where we have the temporary differences, where we determine that. If we have the subsystems normally available for local GAAP ledger, tax ledger, and IFRS ledger, we can import the numbers here right away. So an import, there's a manual adjustment, so the tool always allows to manually interfere. There's automated processes in here. There's always the option to override within the tool, which gives control to the user. That's also always visible. If there's a manual override, the person reviewing will always get a note, and it's always flagged that there was an override. So that makes it easier for the person reviewing and makes that life a bit easier. Also, the tool, if you compare that to different Excel calculation approaches, has validations. One of those you see popping up here, and it just shows directly where the issue is within your balance sheet. So you see, okay, there's something I need to do. Then you can have a look at this and see, okay, I would have, in this case, I'm comparing the IFRS and the local GAAP figures, and just one example for that chart of account. And I can see that I have a difference of 5,000. So now I normally would need to determine, okay, that 5,000, what portion of that is recorded in P&L, what portion is maybe recorded in OCI. And just by determining in the system and setting that up properly, we can use the mapping. Okay, what accounts do go into this account, or is there maybe a sub-level to that, where we split OCI and P&L? And therefore, by using the right granularity here and using a mapping engine that we have in the tool, just by gathering the data, importing, we get a difference. And what the user needs to do is just using this split differences function, and all differences, in my example, just the 5,000, but in if you have a full balance sheet, it copies all data over, to a certain section that tells the tool what's the treatment here. So in this case, the account intangible assets is determined. You can see that by that black box as temporary P&L recorded. That's a standard setting for that line item. If you have OCI, if you have an account determined at OCI, that black box would be here. But again, you can always manually override. If I just say of that 500 is actually OCI, we can do split differences again, and it adjusts that to the 4,500 being recorded in P&L. So this functionality, if it's set up properly, enables lots of our clients to do the determination of deferred taxes on temporary differences within a minute or two, running the import, splitting the differences, and saving the dialogue. That's actually what it has come to. So that's that's a big time saver if you compare that to an Excel world. And also what is then in the next step, first step is preparation, second step is always the review functionality. Mentioned that before, there's a tracking of manual override and so on, but there's also the option to provide comments. Every cell, every field within GTC has a unique ID, and therefore numbers can be added or extracted from there, but also information tagged to those numbers. So if you add a comment to a certain section, you can provide different files, add in, if you have an adjustment from a tax audit or something, you can just provide the documentation, some files from the authorities or something. You can attach that right into the tool, making it available directly for the user that has the reviewing role on that entity or on that subject. So that makes life a bit easier, and therefore is a big win in everybody's time while preparing the notes for this. That's the part for the determination of deferred taxes. Just one aspect of the tool. We also have others. What we have is the tax calculation is for tax reporting. That's two components. It's the actual deferred taxes, but then if we want to go to tax rate reconciliation, the step in between would be determining the tax expenses, the current taxes, and for that the tool provides a flexible approach, what we call a toolbox. So you can determine how your tax calculation looks like. Every country has their, or normally when we first implement a tool, every country runs with a different Excel version of calculating taxes. And we can mirror that here. But also that's the point in that such a project where you standardize the tax calculation. So if you go to one of your countries where you operate and see they have 5 different Excel sheets, this is the point where you could consolidate those, standardize them, gain efficiency by actually being able to have other people working on different files. That's the point that Rainer mentioned with the maturity models. You're less dependent on certain people being available, maybe due to sickness or leave. In this environment, every calculation looks the same, and there's no Excel file somewhere saved locally on a desktop. It's right there available for everybody, and it's clear to everybody because they all look the same within a certain country. And that's the point of flexibility here, that we can tailor that to country specifics within the tool just by drag and drop. It's no programming, it's just by the interface you can program, customize this dialogue, and therefore make it easier for everybody in your foreign jurisdictions to provide the data required, because that is customized to their needs, rather having one template where everybody has to squeeze in their data somehow and maybe information is lost. Here you can provide details and cover specifics for different countries, like differentiation between IRAS and IREP for Italy, for example. If you have other, in the US, the different state tax models, or deduction for local taxes and so on within the corporate tax. All those things you can customize here and therefore gain efficiency because they're all hard linked. You're flexible in that approach for the current taxes. But now we go to the third step to close that off. That would be the rate reconciliation, where we can actually not do a lot. We have a reclassification, of course, but the last step is always the rate reconciliation. And that's where a lot of time is spent. But in our case, we have linked everything. So you can see that the numbers here, as in this case, it's just a few. We'll just take the 14 here, for example. There's a suggested value, and the tool tells you where does it come from. So the tool shows you this is where I gather data, because everything is standardized. The approach in deferred taxes and current taxes, the dialogues are standardized and they're hard linked. You see a deviation from average group tax rate. Okay, what are the impacts here? Where do they come from? They come from this dialogue, this number, via the tax rate. You can jump right there and check, is that really what I need there? So it's not a black box, but it's a nearly fully automated preparation of your tax rate reconciliation, which saves a lot of time during the year-end process. So this is just 3 examples of how we can save time and just a quick run through those, given the time that we have, to speed up the year-end process and coming up with the relevant information of the notes. And that's where we have the reporting section with different standard reports, but also the option to provide your own reports to then just get all relevant information for your notes under IAS 12 or IAS 34 just by clicking one button and get a report with all the relevant data that you need. So that was my quick run through the tax reporting side of things within the GTC, and I'd like to hand over to Jessica to show some more info on VAT within our tools.
Thank you. I will now share my screen so that you can see the Weta GTC. Let me introduce myself. My name is Jessica Fuchs, and I'm in charge for everything regarding VAT within AMANA. Welcome to Weta GTC. Weta GTC is a web-based application, and it is based on a user role concept. In the first step in this home area, you select the country in which you want to work. I now selected Germany, the period, and the company you want to work with. I choose the VAT group, the relevant VAT group member, to show you how VAT group works in Weta GTC, even if it's only relevant for countries that know VAT groups, but the same also applies for standalone companies. Just to show you the master data on a high level, so you can see which master data are needed. So we need your companies with a company code, the tax codes, and the mapping of the tax codes, and if needed, also the chart of accounts. Mapping in Weta GTC means that every single tax code knows where it has to go in the VAT return. So if we switch to the value-added tax, we start with the status, where you can see at one glance how far you are in your reporting process. And it's important to see that compliance stamp so that you can see when and who did any step within Weta GTC. That compliance stamp is part of the whole Weta GTC. You will see it in the further dialogues as well. So the first step we have to make is to import our data. So we normally work with these RFUMS VOO on a sum level. And if wanted, we can also import the V10, which is your VAT additional list, and the so-called RFBILA, the balance sheet. But the last two reports are only for reconciliation reasons. To create the VAT return, we only need the VOO. So you can see the data which has been imported for that month, for that company. So in the next step, if we go to the declaration, you will see that the declaration is already filled with values. That is due to the fact that we had feeded the system with the master data and told every tax code where it has to go in the VAT return in which exact field. So if you open one of the fields by clicking on the little plus, you can see where the values came from, either from the import of the VOO report or due to manual amendments. And you can see who made the amendments or who imported and when the values was imported. So if we want to make an amendment, you can just type in any value you need and then leave a little comment like manual amendment and click on the little green plus. So the value is added to the VAT return and the taxes are calculated automatically. So this is how you work with manual amendments in GTC. And if we have made any manual amendment, you see that the box is turning to blue, showing you that there has been a manual amendment so that the reviewer has an easier way to find the amendments. There are also some automatically reconciliations within GTC. Just to give you a high-level look at the different reconciliations that are possible. Most of them are based on those 3 reports we imported, comparing the 00 report with the balance sheet or with the VAT additional list, so that you can maybe see if the base amount and the tax amount don't fit together, or you can see if you have booked some values without giving a tax code in SAP, or you can do some plausibility checks with input tax or output tax, or have a reconciliation with your EC sales list, or deviation from the mean of the last 12 months, or some checks regarding reverse charge and intra-community acquisition. It's important to know that every manual amendment you do in GTC or any reconciliation solved creates a so-called resubmission. Resubmission means that that it will remind you in the next month and ask you if you have already informed the system if this value already had been booked in your SAP system, or had been re-entered in your accounts, or if it had not yet been posted, or in which exact month it had been posted, so that you can't forget to book in SAP after your amendments in GTC. If we did all those manual amendments and all the reconciliations, in the next step we can finalize our VAT return and also have a look which steps are already to do. And I now finalize it. So I sent this declaration of my group member to the Valorant group member. And if we go to the VAT group return, we see the little green boxes where we can see which data already had been sent to the relevant VAT group member. Almost the same applies for standalone companies. The standalone companies doesn't have that dialog, but you do everything within the declaration. So in the month overview, you get an overview about all your companies and how far they are in the declaration process with our milestone concept. Gray meaning that you have not yet started. Green meaning that the VAT return has already been closed. Yellow means that it is in work, and there's another milestone blue if it is already filed to the tax office. In the month overview, you can also do the review by clicking on the little box. And then you already see the compliance stamp that today the super user had done the review. Our review varies from a simple review to a hardcore ICE principle, so that you can decide how hard your review should be. And the same applies for the year overview, where you can have a look at your whole year and your declarations. And the last step is to send the declaration and to file it to the tax authorities in your country. So that you just have to click on the send data productive case, depending on how it works in your country and what kind of documents will be sent to the tax office. And everything you have filed with the tax office is stored here under documents, so that all relevant data are within WebGTC and you don't have to save anything anywhere else. Last but not least, the WebGTC gives you a set of Excel reports, so that you can understand and analyze your numbers and your values. See that there are a lot of possibilities to make some analysis, variance analysis, or to have a look at your VAT return in detail, or have a year summary, or a finance plan overview. So there are a lot of possibilities to analyze your data afterwards. So you can see that it is really easy and to the automation, and that there are a lot of time savings due to the fact that it is really easy, and it's the same for every country. The steps I've made here in Germany will be the same steps in every other country. Only the declaration depends on what's needed in the country. Next to WebGTC, there's another module called VAT Audit, which gives you the chance to validate your data on a line item level. So we remember in WebGTC it's only on a sum level, and in VAT Audit you can analyze the data on a line item level with another focus. So after importing data directly from your SAP, you can define different audits we want to do. You can create those audits together with AMANA and then run different tasks. And if you maybe decide for 2 or 3 checks you want to make this day, you can go in the next step to the task overview. They have a little overview of the tasks that had already been run. And you have a task management board where you can assign tasks to maybe your accounting team and inform them by email which tasks they have to do. If you want to have a deeper look, you can click on the different document numbers and then have a look into it, and maybe you already know if it is an error, and if so, where the error came from. If not, there is a direct jump into SAP so that you can correct your data within your SAP. Yeah, this was a high-level presentation of what WebGTC can do, and I hope you will get an idea of how much time you will save by using WebGTC and of its possibilities of automatization.
Thank you, Jessica.
And I give back to Rainer.
Thanks, Jessica, for the presentation. Are we through with the slides, or do you want to show any further slides?
With the slides.
Okay, good. Then thanks to Tobias and Jessica. Yeah, we're actually now at the point where you could raise questions. I have not seen any, so if you have the urge to send us something in the next 30 seconds, please feel free to do so. Otherwise, I will in the meantime take the opportunity to say thank you to my presenters, also say thank you to the audience today for participating. The webcast will be recorded, or is recorded actually, and you can find it on our website, where we basically put all our tax technology webcasts. You will be provided with the link to this website and also with the slides of today's presentation after this presentation via email. So we'll send out a central email to all the participants and everybody who has basically who wanted to participate actually today and could not. So you will get all the material. If you have any questions, reach out to us or reach out to Amana directly as you wish. Thanks for your interest and have a good day. Thanks everybody. Take care. Bye-bye.